Hey everybody, I'm Charting Man Dan with the Chart Guys. I've been trading for the last 14 years, as many of you know. I'm a little bit sick, so bear with me. There might be some coughing and sniffling, but we're going to power through it here and talk about blow-off tops in this webinar. It's a trade setup that you can see across individual hype names, sometimes sectors, sometimes entire markets, and it's definitely something that you want to have in your tool belt of experience to be able to capitalize on. In my career, I would describe myself as a hype sector specialist. I've been through a dozen of them at this point, going all the way back to my penny stock days with pump and dumps. And the reason that I've been able to keep my gains, that's what makes me different. Anybody can make gains in a euphoria market. It's who can keep the gains once the blow-off top has been set. And the reason I've been able to do so recently is because I made all the mistakes in the penny stocks when I started learning, because as we know, penny stocks have a bunch of pump and dumps. So we're going to talk about blow-off tops. Thanks for any likes and shares. I appreciate you joining me this fine Saturday. Make sure and check the comments of this stream, as there is an ebook that goes along with this webinar. You don't need to be reading it while I'm talking, but it's a good summary after the fact, and it also has a couple resources that I am going to mention that are useful as well. All right, let's get into it. So, blow-off tops. In this, we're going to talk about setting the stage, the price action that leads to a euphoria run that leads to a blow-off top. And there's two kinds that we're going to talk about. We're going to go over some, real-world examples with MSTR, which was very recent, DJT, which was earlier this year, and then TLRY, which has had multiple ones going back over the last 5 to 7 years, however long that's been. But there's certainly, altcoins have plenty of blow-off tops. They're all over the place. They happen. And the reason that, technical analysis can be useful in terms of profiting in markets is because history repeats itself. And the reason history repeats itself is because price action is essentially a depiction of human emotion, and human emotion does not change through the ages with regards to trading. So the blow-off tops and the euphoria runs happen time and time and time again, and they're going to keep happening as long as there's markets to be trading and as long as we have humans trading them, and bots as well. Bots are definitely participating. We're going to go over how to trade it. So that's what we care about, right? How can we make money from this pattern, both on the way up and after the climax top has been hit? And then, of course, at the end, that is what is coming in the broader market in 2025. We're going to talk about some clues to potentially be looking for and what would be required of that setup. Along the way, feel free to ask any questions in the YouTube chat as we go. And if my throat isn't killing me by the end of this, then I'll be sure and answer some of those. So thanks again. All right, so let's set the stage. There's two different kinds of market environments that lead to a euphoria run that leads to a blow-off top. The first is just a straight up all-time high run. And the preceding price action of these two different setups is obviously very different. So the example we're going to look at is MSTR for an all-time high run. And the prevailing, price action is the bulls have complete control. Bears try and find tops and keep getting stopped out. And it's almost like the market accepts the bulls have won this move up. And you get the emotions, you get the FOMO, the greed. That's the same in both kinds of setups. It's almost like a Venn diagram where you have the all-time high blow-off top, the short/gamma squeeze blow-off top, and then the overlap between the two. And it's the human emotion that's the overlap between the two. And it's valuations don't matter. And that's why a lot of fundamental traders get in a lot of trouble in these setups, because they will start shorting based on a fundamental basis. But as we know, when FOMO and euphoria are at their peaks, that doesn't matter at all. Market cap doesn't exist. I mean, that's why we have things like Fartcoin going to 500 million or a billion, whatever market cap. That's why we have MSTR is worth, these S&P 500 companies combined, whatever it is. And so that's why we use technical analysis in addition to any fundamental analysis, because we know again, human emotion throws all of that out the window. So the difference is the short slash gamma squeeze. And if you don't know what a gamma squeeze is, I'm not going to talk about it in depth in this webinar, but that's just something where, make a note. That's something that you go and research on your own. What is a gamma squeeze? But, essentially, we'll keep it simple and say it's a short squeeze where the prevailing price action is all bearish, and then you get this short squeeze out of nowhere, and that leads to a lot of people trying to short. And that's, people can be shorting based on technicals as well as fundamentals, but it's just a different sentiment that you're coming from based on those two different kinds of preceding price action. One is all bear despair, short squeeze, bulls show up, and one is bulls in complete control. Market accepts the bulls have complete control into that blow off top. So let's now look at a couple examples to show you exactly what I am referring to. And we'll start with TLRY. And TLRY is great because it has an example of each. It has an example of a blow off top with an all-time high euphoria and a blow off top that was a short slash gamma squeeze. And so here's, TLRY Cannabis Company, and IP, or does an IPO, or was it an IPO? I forget whether it was an IPO, reverse merger, whatever. It came to be trading in 2018, and you can see it did absolutely nothing with no volume, and then just surged in an insane manner and ran, 1,000% plus in 2 months, which obviously is a huge amount in a short period of time. And so the action that you get is a ramp up in bull volume, and the preceding characteristics are, okay, bull move, big gains, but you're reaching the end when the gains start to get exponential. And you can see that if we measure, the move here on TLRY, once this move started to get going, big move, very worthwhile, right? 230% over the span of 14 days, just this little window here. All right, great move. Then you get a move where you go almost the same, 200+%, but it's in 3 days or 4 days. So it's either increased gains over a shorter period of time, or essentially the same amount of gains in a much shorter period of time that tells you, okay, we're getting really close. And one of the descriptors that I use is this is stupid. When you enter the this is stupid phase, and that's very subjective because somebody who is newer and has not seen as many blow off tops is going to think we're in the this is stupid phase a lot sooner than someone that has experience and has seen a bunch of these in terms of the setup. So I'll try and describe that a little bit more as we make our way going through here. But just again, make note, increasing bull volume. The last leg up is essentially exponential, where the same gains or more gains are happening in a shorter period of time. And then the final climax is very most often a gap up, not always, but more often than not, it's a gap up. And again, it's not the first gap, because you generally will have multiple gaps as things are getting extreme. And then you look for the volume climax. And very often volume climaxes mark some nice tops and bottoms. And so even here, on the way up, you got a gap that's the highest volume at that point into brief consolidation, another gap that's the highest volume into that point, brief consolidation, another gap that's the highest volume at that point, brief consolidation, another gap that is the highest volume at that point, brief consolidation, and then the big mother candle. And it's a little bit tricky to determine, is this the one? Is this the highest volume candle, or are we going to get a higher one in a few days? But generally, the candlestick shape can give you clues as well. You can see, the range obviously on the candles, but there's not as much battle going on these candles. There's some wicks, but this is the reason we have the volume climax is you get a huge amount of bull volume and a huge amount of bear volume in the same day. And it's almost a crescendo of that volume that helps you pick out that climax. And you can use time to help determine a volume climax, time left in the candle. On this day, you could look and say, all right, we're halfway through the trading day and we're already at 90% of the previous highest daily volume candle on this move up. I know this is going to be the highest volume candle that we've seen, which increases my confidence it's going to be a blow off top type of move. So I'll give a couple more examples here, then we'll talk about how to trade it. So that's one where it's blue sky euphoria, where bulls have complete control. And again, the market cap that TLRY was hitting at these levels, $250, $300, made absolutely no sense whatsoever. But they also didn't at 120. So again, if you're a fundamental trader and you're shorting because it's overbought at 120 and it makes no sense, we went up another 100% from that point. And so again, you just got to be careful, because if you are even 1 or 2 days too early on trying to find a top, number one, you could leave a bunch of money on the table. That's the good aspect of what could happen, because the bad aspect is if you try and short and you're too early, you get blown up, even if you're just 1 or 2 days too early. This person was 1 day too early from the top and shorted at 150, and the next day they're down 100%. So just keep that in mind as well. And you wouldn't even be looking to short climax top unless you got a lot of experience. So just keep that in mind as well. I've got a rule where I don't short blue sky breakout bulls. That said, I have enough experience to know when I change my rules just a little bit, and we'll talk about that on MSTR in just a moment. The other example on TLRY is the opposite, where it's a short squeeze, because the bears had complete control once we hit that climax top, years of just bleed. We go from 300 down to 40, 30, 20, 10. We drop down to $2 from 300. We're dropping 99 point whatever percent. It's just complete bear control, and then sideways, nothing going on for another year, and then boom, huge shot up. That's what it sounds like when it goes up. Boom, big move up, 600, 700% in a month out of nowhere, seemingly. This is a short squeeze / gamma squeeze. And in the ebook that I posted the link for, you'll see that there's a link to a video that I did on maybe this day, where I talked about the blow off top that was coming and the gamma squeeze and things like that. So go back and watch that video for a good insight, a good look into, it's easy to always look back after the fact and say, this is what happened. But this is an example of a video as it was happening, pointing out the top that was coming here. But again, it was, the move is significant, but look at how exponential we get. We see a move up over a period of time where this leg up, significant for sure, 170% over 17 bars, and then you get 180% over 4 bars. That's the exponential leg up. And again, it's gap up, not done yet, closing strong enough, gap up, and the volume climax on this one, a bit unusual, actually happened the second day. That's how you know it's massively bearish, because that's almost a red Maribozu candle, where, this volume is almost all bear volume. Obviously, there's people trying to buy the dip along the way, but it's a very different look. It was extremely high volume on this candle, big push down, big push up, battle going on, but this is the bears winning in a big way. And again, then it's just a slow bleed down from there. But the difference is, much more confident knowing a top is coming here for a longer term lower high versus blue sky, where things can stay insane for a while. So let's now go to more relevant. So more relevant on MSTR, just because it's more recent. And again, this is another example of the blue sky bull in complete control. We trade sideways for a long time. Obviously, the Bitcoin run here to all-time highs is a major factor, but MSTR led the way in terms of percentage gains and also in terms of its move up. And again, just going over the examples, prevailing price action, bulls make a nice move, absolutely. 130% in 44 days, and then you get 104% in less than a quarter of the time. And you got your gaps, gap up, but it's not the top, second gap up, 500 psychological level, and that is your volume climax. That's the top. And again, a lot of bear volume on that. Not necessarily as much of that tug of war, tons of bull, tons of bear. The market was a lot more confident on the bear side that day with that second gap up. And again, just, a 3-day move. That's the this is stupid phase, where you've already run hundreds and hundreds of percent. And in 3 days, you're up another 60% after going up hundreds of percent. And so that's when it gets stupid. And again, my rules: do not short a blue sky bull. I adhere to that 99.5% of the time. But when I have high conviction and confidence and I get a scenario that is rare, I will break that rule, just in the sense that I'll give it a try. The setup is there where I have enough conviction to give it a try, and did end up shorting MSTR on this day. Didn't go aggressive. I wasn't confident enough to, put it all on the line and make my year on this candle, but it ended up, a week maker or whatever, just because the size of the move. I obviously sized down my position size, knowing there's going to be massive volatility, and it's a 30% drop in one day. So very worthwhile. So again, we'll go over one more example here of DJT, and then we'll talk about how to trade it on the way up, and then how to trade it into that climax. So DJT is another example of the short squeeze variety of this move, where again, bears have absolute complete control. It's going to zero, no value whatsoever. And then you get the increase in election odds, increasing the probabilities, Trump's going to win, yada, yada. And you get a significant move off the low. And clearly it's a short squeeze. I don't need to look at short data to know this is a short squeeze. The chart tells me everything. This is just overcomplacent bears having absolute complete control, no reason to cover whatsoever. And then out of nowhere, you run up a total of 365% in a month plus of trading. You know that shorts are getting smashed. And you know that, once you're already up 150, 180% from the low, the fundamental bears come out and say, this valuation doesn't make sense. Look at the revenue of the company. Look at the balance sheet. And they start shorting, and they add fuel to the fire as they get squeezed out of that move. So there you go, 180% in 16 bars. The final 3 days, another 50%. Again, the first gap doesn't do it. The second gap, big gaps, that marks the top into a significant move down. And again, how do we know this isn't the climax? We get our gap up open, we get our volume climax, but then we just trade sideways. And you'll note the daily stair step. We didn't lose the pattern of a higher low every day. We just consolidated sideways and then saw another leg up. So, had we seen another red day following this day, then that could have potentially been that climax. But you have to have the follow through, obviously. And so here, ton of bull volume, ton of bear volume, climax type of action, big dump down, and then it did it again. First gap, is that it again? Not yet. Second gap, there it is again. So again, it's tricky, right? It's not just clear, cut, and dry. Okay, this is the gap, so this is the top. That's not the way it works, because it does have gaps on the way up and high volume candles before it is done, which is why we must be protective. So let's talk about how to trade it. The way to trade on the way up is back burners, of course. I love the back burners. If you don't know what that is, Google Chart Guys back burners for an in-depth video talking about it. But it's easier in blue sky breakout to have the confidence to be longing on the dips. It's much harder on the short squeeze move, because on the short squeeze move, we know, it's almost like the guillotine's ready to drop at any point in terms of being the top. It's a little bit more daunting in that sense, because we know this is just a short squeeze. We know, this longer term is likely a lower high, and it's going to set a top for a long time, whereas an all-time high run can go for a long time. So I always make way more in an all-time high run than I do on a short squeeze move. And so, TLRY, the way to be playing the back burners, just as an example, I'm not going to zoom in here just because it'll take me forever to find this data, but, hourly oversold on the way up is the time you're making entries for daily higher lows. And the playbook, the euphoria playbook that I've used in Canadian cannabis, I've used in AI names, is you sell the gap up open after, really it's you close strong. I started doing this in 2013, 2014, cannabis penny stock run where we went 1,000+% in many names, where you close strong, you have high conviction, you're going to gap up the next day. You sell the gap up, and you reload that position 5-minute oversold conditions for an hourly higher low to keep that run going. And again, it's just that back burner strategy. And, the really aggressive bulls that are trying to, take advantage of a once in a lifetime opportunity and change their lives, they're going to add back more size versus someone maybe adding back the same size. If I sell a position at $100, let's just say 100 shares at $100, and then on a gap up, and then I reload 100 shares at $90, 5-minute oversold, that's the more conservative style, whereas more aggressive is going to compound, and they're going to add back, if you sell 100 shares at $100, add back every one of those dollars at that oversold condition. So this is where essentially my trading career is periods of base hits where there's nothing fancy, nothing special, and then periods of exponential gains to the tune of thousands of percent by capitalizing on euphoria blue sky markets, whether it's 2017 crypto, 2018 Canadian cannabis, 2014 penny stock cannabis, so on and so forth. So the run-up is the back burners. The climax is essentially scaling out, I find, is the easiest, where, you're not going to, don't expect to nail a top, right? We don't look to nail tops and bottoms. And so, it's easy to get down on yourself if you're a newer trader, where TLRY here, let's say you sell half your position at 150, and then the next day we wake up and we're at 250, and you say, oh my goodness, I'm such an idiot. If I just held, I would have had this much money. And then, a week later, we're down at $100, and you're pretty happy you sold half your position at 150. So breaking up those positions, I will sell partial position into gap ups the majority of the time, just because I have to keep in my mind, this may be the top, and I'm not going to know until I see whether the dip gets bought or not, whether or not this is the top. And then if the dip gets bought, we had this recent price action in these quantum stocks, and QUBT, again, valuations make absolutely no sense for the revenue that this company has and the balance sheet, but just a massive move up. And I was looking for the top this day, and it's the kind of thing where, again, you sell off on the open, you don't know if that's the top or not. And so, again, taking some profit on the way up is the ideal way, in my opinion. So here's, Tuesday. Actually, let's go with Wednesday. No, we'll go Tuesday. So Tuesday, we gap up open, and we instantly drop 10% plus 11% in one 5-minute candle. That can very easily be the top. You don't know until you see a V-shaped bounce into a new high of the day that it's not. So again, if you're holding a full position and waiting to see whether or not the dip gets bought, by the time you know that the dip is not getting bought, you're down 15, 20% from where you were 20 minutes ago. And so that's why if you're selling partial, it's a lot more forgiving, knowing that you're not going to nail the tops and the bottoms. But again, it's just, this name hit so many short-term oversold conditions into continuation. And then it was a bit different in the sense that it wasn't a gap up that marked the top. It was actually, this is a harder one where you get trapped, where we closed strong enough. The red flag here was obviously this was the FOMC day this past week, and the entire market dumped in a manner that we have not seen in a long time. So I was astounded that this name was able to recover in the face of the FOMC weakness and V-shape to a new all-time, not an all-time high, but a new high of this run, and close strong in the face of the entire market showing weakness. And then, of course, the next day, it trapped a lot of longs in the sense that the open, you close strong, but then the open is 14% lower than that close. So they come in all shapes and sizes. Obviously, everything's a little bit different. But again, if you're scaling out into the move up, selling a third, selling a third, selling a third, that makes it, your average sell a lot more forgiving. So is this the top on the quantum? I think we're back. Internet just cut out. Thanks for bearing with me. I almost made the joke. This stream was supposed to be Thursday, and then I got sick, so we kicked it back to today. Now my HVAC is out on the coldest day of the year. Got to deal with contractors. I almost made the joke to start this stream that market makers don't want me to give this information, and now my internet just cuts out. I think I'm on Starlink right now. We'll see how good it is, but appreciate you bearing with me. Let's see if we're back. Unreal. All right, we're going to keep running with it. I forget, obviously, where I was just now. So we were talking about price action on the way up. And again, you're scaling out. You're not expecting to nail the top. And the key is I'm not giving back these profits. I've seen an amount of profits in a short period of time where I am keeping it. And I know that this is an unusual market environment, and I'm not giving it back. The advanced traders are going to short blow off tops. You need to look in the mirror and say, do I have the experience? Do I have the number of years under my belt? Have I played enough blow off tops to open the door to give myself a chance to try and short a blow off top? The majority of people, the answer is no. You know, if you want to try it with 10 shares, absolutely. That's how you build experience. Go for it. I highly suggest doing that, just because that's how you will eventually, years down the road, have the confidence to do it with a significant amount of capital that will be worthwhile. But you have to watch them play out multiple times. You have to try and fail to play them multiple times before you're going to have any success, because nailing that top is extremely tricky. And as I mentioned on this most recent quantum move, I tried and failed multiple times looking for a top. Granted, because of my experience and abilities, I was able to fail with break-even stop-outs. You know, I make a short right at the open. We get that 10% drop. I'd sell a third or half the position, and then I stick my stop over the high of the day, and I stop out. And I say, nope, that's not the top. If it's the top, we're not going to V-shape into a higher high. And then you see when the top was actually hit, it was just a straight drop on the morning. We didn't get anywhere near back the high of the day for the entire rest of the day. So if you don't have that experience, you're looking to benefit from the long side because it's much easier to ride the trends and momentum, specifically in the blue sky breakout names. And then there are bounces to play on the way down, back burners, right? So we played back burners on the way up, and we could play them on the way down. They just don't work as well, and we just need to take that profit quicker. But again, you look at, MSTR, after it had its big pullback here, 4 days were down 35, 37%. We did end up bouncing 23% in a couple of days. So there are ways to play in both directions. You just have to have in the back of your mind, if you have high conviction that the climax top has been hit from a big volume candle, from the climax action, from follow through after the initial pullback, you have to have that in the back of your mind. And that just means if you're playing any bounces, you're more picky, you're taking profits sooner, and you're being more protective. Because, if you are not disciplined and don't have a stop loss on your trades on the way up, it's extremely forgiving because we see continuation. Whereas if you don't have a stop loss, somebody tried to play this bounce on MSTR at 425, and 2 days later, they're down 20% because they didn't have a stop. So you just have to be much more protective when you are confident that a blow off top has been hit in the short term. And just to answer a question, Tesla, is this a blow off top? I don't see anything that indicates that at this point. We had a bunch of gaps on the way up. We have obviously a huge move, but this is contained price action where, just again, a comparison, the pullback we've seen now over 3 days, there's high volume. It's nothing screaming high volume in terms of, look at MSTR again. There's nothing comparable to this volume. And you got to be doing volume in terms of dollar volume, rough math for dollar volume, because a million shares at $500 is way different than a million shares at $200. So just be aware of that. But this is, this sticks out like a sore thumb. Tesla doesn't have one of those candles. And again, percentage. MSTR dropped 30% in a day, whereas after 3 days, Tesla's down 14%. And also retracements. You look at your retracements, this most recent leg up, we haven't given back half of that move yet. Whereas you look at the MSTR last leg up, and you gave back 70% on the first daily candle. So those are different ways to compare whether something is a blow off top or not. Retracement size, volume amount, the percentage move of the pullback. A blow off top on a euphoria name is going to pull back 30% very quickly. That's the standard target for a blow off top. So the big question that we have, and one more note about trading these is if you're looking to short a blow off top and hold a swing position, it's extremely difficult to do because of the bounces on the way down. Even in the 2008 bear market, there were huge bounces on the way down. And I just know myself as a trader, I can't sit through those and just hold the position. For example, let's go to the 15-minute time frame for MSTR here. When that top was hit, even that morning, from pre-market high, you dropped massively 22% in an hour. But if you're going to swing that short, you have to see your position lose 15% not lose, but give back 15% of profit in just over an hour. And then you get another big leg down. But, then from there, we get another 22% bounce. So I find that when I'm confident that there is a blow off top, I still really struggle to hold a longer term swing position because it requires sitting through 10, 20% bounces on the way down. And obviously, if you're more active and experienced as a trader, you sell some, you reload after a bit of a bounce. It requires a lot more hand holding, a lot more activity. But just note that, let's just look at the NASDAQ real quick before we talk about 2025 here in the broader market. But the NASDAQ on the 2008 drop, even before things got massive here, let's say you nailed the top and there's your 25% drop over a couple of months. Wow, well done. Are you going to hold through a 22% bounce? That's almost your entire move down. That's a 25% drop into a 22% bounce before the big move down of, 50% almost. So that's one of the tricky things with being a bear is there are big bounce retracements when you get massive volatility on the way down in things. All right, now the question that we care about in the short term here. Is this a blow off top in 2025? Now, I have seen blow off tops in individual names dozens of times. I've seen blow off tops in sectors, half a dozen plus times. I have never seen a blow off top in the broader market. Really, I've been trading for 14 years. I've been focusing on, the NASDAQ and S&P 500 out of the penny stock world for a decade, let's say. 2022 is the first real bear market I've ever seen in the broader market since I've been trading it. Let's just say, since 2012 when I started, 2014 when I started paying attention. I essentially graduated penny stocks 2010 to 2014, and then I graduated to the big boards 2014 to now. And I have only ever seen one bear market in 2022, and I've never seen a blow off top. So I have to, again, so much of trading is looking yourself in the mirror and admitting things to yourself, and it's going to sting your ego. I don't have experience doing this. I need to, in 2022, I was saying to myself, all right, I'm in turtle mode. I'm going inside my shell. I'm not going to try and, make big gains as a bear because I've never seen a real bear market. This is my opportunity to observe and learn and file that away in my memory bank so that the second real bear market that I see, I'm going to capitalize and make significant gains on it. But I accepted that it was new to me and that, I wasn't going to attempt it in any meaningful way because I have to observe it and watch it play out before I could expect to ever benefit from it. And so is this a blow off top? Historically, if you look at the NASDAQ, it happens, really the best example we have is the .com bubble. And it happens in the markets as a whole, very different than it would happen in an individual name because there's so many components involved. But it wasn't the same kind of obvious volume. It wasn't the same kind of gap scenario. This is the weekly chart. And again, look at that bounce retracement. You nail the all-time high. There's your 47% drop right away. Are you going to sit through a 65? How crazy is that? That you can nail it and we don't even get anywhere back close to where you nailed it, but you give back 60% plus of what you nailed before another big move down where the real bloodshed takes place. It's really hard to hold those positions longer term. It requires maneuvering. But again, I look back at this and say, there weren't any glaring signals aside from, I'm sure we would have been able to recognize market sentiment, euphoria, probably the this is stupid phase in terms of how quickly those gains were racking up. You got the NASDAQ here in a period of 20 some weeks. So we'll call that 5-6 months, 110%. So obviously you're seeing years worth of average returns in a half a year's worth of action. But again, it wasn't as glaringly obvious. And the number one thing as we look at current price action in the broader market is, okay, we know we're extended, right? We know we've been seeing moves up. The NASDAQ from the 2022 low has seen 100% plus move in 2 years of action. And we know that that is far higher than what the average rate of return is. And that's going to return to its mean at some point through some red. But it's what really it boils down to for me is I need to see, as I've been saying, you've probably seen many times, I talk about the correlation between the NASDAQ and semiconductors, big tech and semiconductors on one side, and the financial sector and healthcare and other sectors on the other side. And just the picture perfect rotation that has been taking place over the last 2 years in these names is just a perfect tag team action. One name gets a leg up, it takes a breather, the other name takes a leg up. And it's been 95% of trading days is an inverse relationship between QQQ and XLF on this move up. What I need to see if we are going to get a blow off top in the broader market is I need to see that correlation change. And it has changed the last 3 days since the FOMC. As you know, when QQQ, XLF, and XLV are all hitting the low of the day at the same time, which happened on the FOMC reaction, you get a big flashing light in your head that tells you money's leaving the market. This is unusual in the bull market. This has not happened often, and it stands out when that is happening. And then on Friday, we had the exact opposite. We had all major sectors hitting the high of the day at the same time. And it's the exact opposite implication. Money's pouring back in, they're buying the dip, there's shorts covering, whatever. And if we're going to see a blow off top, I need to see the correlation between these major sectors that has been inverse 95+% of the last 2 years. I need to see that correlation change so that it's all bulls and it's more like Friday. If Friday's action of all names going up and at the highs together, QQQ, XLF, XLV, among other sectors, if that were to start to become the norm for a few weeks of action, that would then tell me the probability that a blow-off top is coming would increase significantly. And again, the this is stupid aspect of the equation is, okay, if we've gone up, let's just use the NASDAQ here. So if we've gone up 20% over the span of 14 weeks, so 3.5 months, but then we see 20% in 5 weeks, 6 weeks of action. I know it sounds like it can't happen, but if that were to happen, it would make us really confident a blow-off top is coming. You won't see that kind of a move up without all of the sectors going up in unison. So that's the most important glaring aspect of what I hope it happens, just because I know that if we get this final leg up, I'll make a bunch of, gains on the bull side, and then I'll be extremely confident. I'll be selling long-term no-touch positions if this happens. I'll be selling SPY that I've been holding since the CVID dump and the 2022 bear market. I'll be selling crypto that I've been holding since 2017. It'll be a fire sale for me if we were to see the this is stupid phase. Again, probabilities, do I think that's what's going to happen? I don't have high conviction. I'm not going to sit here and say, this is what's going to happen or predict price levels like so many people love to do. That's not my style. I react much more than I predict. as my style of trading, I'd say probably with the current setup, maybe 40, 45% chance that will happen in a blow off top manner. But I'm watching for it, and I know what I'm watching for, and I know if it does happen, I'm going to smash it in terms of, again, exiting all those longs, eventually grabbing some shorts. Same deal, not needing to nail the top, not just scaling into this is stupid moves, because I know it can go much higher than I think it can, and it's more of getting a level to play off of where I can say that's either the top or I'm wrong. Because again, if you're scaling in and you're even, excuse me, individual names, if you're a couple days early, you can get blown up. I assume with the broader market, you would need to be a couple weeks early to get really hurt. But I need a level, excuse me. I need a level where I can say this is either the top or I'm wrong to have my thesis invalidated. Because if your thesis is we're overbought, that doesn't get invalidated by continuing to go up. You have to have a level where if this happens, I am wrong, and have that then play out. All right, I am now reading the YouTube chat as my throat is catching up with me. We'll see how we can go. Do my best. Again, thanks for the likes and the shares and stuff. Good to see you all. So first question, do I think quantum stocks have hit their blow-off top? I mean, that was a blow-off top. Is it the blow-off top? Have to break the low that we just saw. Probability needle, right? So if I say I'm 55% sure that is a longer-term blow-off top, if you break the low that we just hit, that goes up to 75% plus. It's a very big shifter. So we can say maybe we watch the price action. We anticipate equilibriums. Tightening 4-hour ranges is the most likely scenario in those names into next week. And then the direction that the tightening range breaks is going to dictate significantly how the probabilities shift from there. Good point, Brian. Volume shows shares traded, not dollar volume. It does matter. I mentioned that point. So again, examples of blow-off tops and indices, there aren't many. Again, the .com is probably the best you're going to get. How will I trade? Let's just say it happens in 2025. If we do get another big leg up over the next quarter or whatever. Again, as I mentioned, I'll be selling longs. That's the easy part, right? Scaling out into strength. The harder part would be playing the downside. I will be playing SQQQ, SPXS, leveraged ETFs, and I'll be playing some of the volatile individual names, whether it's Tesla or NVDA, things like that on the way down. But only a few, right? I don't want to have 15 positions. I just want to be focused on 2 or 3 positions so I can give them my full attention. And again, knowing that there will be big bounces on the way down and trying to navigate that. One of the key aspects of big wins, both on big moves up and big moves down, is your willingness to sit through significant drawdowns. You're protecting to not give it back, but in 2017 crypto, I had a goal of 100% when I entered Ethereum when it was double digits, and that ended up being thousands of percent. But as soon as, my goal is 100%, and now I'm up 1,000%, if I give back 15% of my account from that high, I'm giving back a huge amount of capital, but I'm still way above what my goal was. So I was opening the door to those drawdowns, knowing they're going to happen, to give myself the possibility to continue exponentially growing. And you have to accept that. So same thing, on the bear side, if you could just set a stop at break even and you're willing to accept the drawdowns of the big bounces, knowing that if we're going to see continuation down, we're not going to get back to your break even, but you're going to get back 30% of your bear gains on some big bounces before ideally another leg down. You have to open the door to the drawdowns to benefit from the massive moves. All right, talked about Tesla. I mean, again, I'm not bearish Tesla in the short term. I took 2/3 of my position off, right? So I was in at 309 average. I exited a third at 421, a third at 477, and I'm keeping a third. Why am I keeping a third? Because the break even on that third is now $39. So I'm going to let it play out and see, a daily higher low is the most likely scenario. We'll see a support level established in the near term, and then I can move my stop for my final third under that level if I want. Because again, I have to accept some drawdown if I want to allow for the potential of greater gains. But I don't see any glaring red flags at the moment. That may be our top for a while, but we have to set a daily high or low. We have to fail the all-time high. We have to confirm a daily downtrend. There's a process. Bears still need a bunch of check marks before we have that conviction. BTC, I won't call it a blow off top yet. Again, weekly consolidation inevitable. We knew that was going to happen. You can't just go straight up and never see weekly consolidation. The key is the trends, right? You establish a level, you bounce off of it, and then if you fall back and break that level, that's the bears proving themselves with follow through. And that's when you gain more conviction that a longer term top is being set. So as soon as Bitcoin gives us a weekly high or low, that's then going to be a very important level for me in terms of expectations Q1 2025. $2022 was a bear market. I mean, you could see it coming, right? That was the most massive euphoria I've ever seen in my life across markets. Euphoria only ends in one way, with a big pullback. And we're in euphoria, without a doubt. I mean, the broader market, the last 2 years, the fact that so many of these names are up hundreds. I mean, these quantum names, QUBT just ran 5,000% in 5 months, or 3,000% in 5 months. QUBT just saw the gains that Bitcoin has seen from the CVID lows to 108,000 over 6 years, 5 years. No, CVID lows, 4 years, whatever. 4 years of Bitcoin massive gains. QUBT just saw that in 5 months. We are absolutely in a euphoria phase in the market. Trying to nail the top of that is difficult, but we know that when it tops out, there will be a significant drawdown of 20, 30% at least. So, the question is, why was 2022 a bear market in hindsight? How can we use that predicting the next one? Go back and look at it. What did the daily chart look like at the top? How did the bears confirm the first daily downtrend? What did the weekly chart look like? How did the bears confirm the first weekly downtrend? These are clues that you can use. Again, previous history, it's not going to play out the same way, but it will rhyme. And there will be lessons. I mean, the only reason I'm a good trader is because all of the lessons of previous experiences that I apply to current conditions whenever I'm trading. I personally don't use RSI divergence. I know a ton of people do. I won't say it's good or bad. I'm sure it's great for some people. I've never found use with it. I much prefer price action trends. It's just my style. SPY early 2018. I certainly vividly remember that. Let's look at that real quick. But even then, it was, it was a rounded top. Look at us chill out sideways. I mean, that's not a, yes, there was euphoria. Yes, there was, a significant amount of upside in a short period of time. Oh wait, that's a CVID. Bad example. So here was one in early 2018. Even then, yeah, no, that's not a blow off top for me. That's more of like a rising wedge. Bull break, no follow through, sideways, sideways, and then just rolling over out of nowhere. I don't expect, if there's a broader market blow off top, I don't expect that I'm going to be able to as easily identify it as I would an individual name. I mean, this action leading up into that top, I mean, that just looks like, how many periods of that have we seen in this market environment the last 2 years? It will be harder for sure. Do I believe in a Santa Claus rally? I mean, it's already December 21st. Happy solstice. It's already December 21st. I would just focus on current price action. The low that we just hit on Friday, yesterday, that's a very important short-term level. If that level holds, we're going to new all-time highs. If that level breaks, the bears will be proving follow through. Santa Claus rally is just the seasonality of a general bullish environment to end the year. Has to do with fund managers, buying things, etc. Again, AI is such a useful tool right now. If I had AI when I was learning how to trade, oh my goodness, you could chop off a third of my learning time. Anything that you don't understand, write it down, and you now have a rabbit hole to dive down. Gamma squeeze. AI will tell you everything you want to know about gamma squeeze. Put in 30 minutes, an hour, and you'll then be a gamma squeeze mini expert. We just had our Black Friday deal for Chart Guys membership in November. But if you email support@chartguys.com, I'm sure Toby will help you out. All right, I got 4 more minutes. I'm still reading your comments here. Is there that's a good question. So I had mentioned selling partials on the gap up. Is there a gap up equivalent in crypto? No, and that's a disadvantage, in my opinion, just because gaps are almost like they make trading stocks easier. If I'm looking for a climax top or a climax bottom and you give me a gap, my conviction is so much higher. And so you don't have that in crypto with the 24-hour trading. I'd be more reliant on the volume climaxes. There was a stream, I'll try and find the clip for it, but I believe it was XLM, where I was doing a live stream for crypto and it was happening live. And I was saying, this is a climax top. We can tell by the amount of volume in this 15-minute candle. It's halfway done. We have half of this candle still to go. And then that ends up being a blow-off top. Volume climaxes are your best guide for blow-off tops in crypto. I'm looking right now on our website to see what resources we have on volume climaxes. I know I've done content on it in the past. Problem is, when you do so much content over a decade, you gotta dig it up. Wow. 1 year ago to today, I did a video, how to predict a volume climax. All right, pulling up the link here. So just drop that in the chat. It's gonna be a really long. Hold on a second here. It's a really long link because I'm using our search feature. Somebody on the back end, if you can help me out. Worst case, I'll post it as a comment on this live stream once it is done. Yeah, the link's too long for me to post. Anyways, if you go to our website and type in chartguys.com and then look up volume climax, it'll come up. All right, a few more here. Am I confident on the Bitcoin miners in the coming weeks and months? No, I haven't been confident on those miners this entire run. I'm watching for it, but they are just not performing. You have to see relative strength return, and it just hasn't been doing so. Are there any government factors or changes that could interfere with my market sentiment? Honestly, that is so secondary to price action. It's all price action. Everything I need to know about what the market thinks about anything the government does, it's in the price action. If you're trying to get some long-term positions going, you got to wait for fear. The only time I have ever bought long-term positions in the stock market is the CVID dump and the 2022 bear market. Are things fearful? Are people talking about how much further we're going to go down? Are we oversold? How we've been pulling back for months? Then I'm buying some long-term positions with many year time horizons. If we're in euphoria now, this is not where I'm looking to buy long-term positions. Sectors for rotation. I haven't traded the energy sector in years. I bought energy on Friday, right at the bottom. And natural gas for the first time in years. Measuring blow-off toss with the super stack indicator. So that's when the super stack indicator is when you're in extremes on a bunch of time frames and they align. It could be a clue. I generally like super stack on the way up to be a profit-taking signal. You know, if you're getting some super stack signals, that's when I look to take some profit. But it can mean pay attention, pay extra attention. You know, I wouldn't say something's a super stack, you just short it. But it could say pay attention to look for a temporary top or the top, depending on how long a time frame. All right. Thanks again, everybody. Look forward to the next stream where I'm not sick, but appreciate the likes and shares and interaction with you all. That's why I'm here on a Saturday, because I enjoy it and you all make it enjoyable. So don't forget to do good things. Have a great holiday week up ahead. Don't overtrade on the shortened holiday sessions. And let's get it in 2025. Don't forget to check out the ebook. Link that free ebook. I'll do it one more time.